story just came out. The wealth of the top 1% just hit a record-breaking $44 trillion, right? 44.6. This is the all-time ever, you know.
Yeah.
And you've read the story. You've seen it. It's not something that we're not seeing. If you pull it up, Rob, go all the way to the bottom. The most important thing to see is there, right there. So check this out. So you go pre-2010, it was 15 trillion. So it's growing steadily. And in 2020, we dump a bunch of money into the market and we're printing money, right? Where does that money go to? To the wealthy, of course. Within 3 years, the net worth of the top 1% goes up 50%, okay, from 30 trillion to 44.6 trillion. The way we judge, Peter, and this is the part, I'm 45, right? I don't know how old you are. You look great. I don't know how old you are.
I'm 61.
Okay, you're 61. You and Tom are on the same age, okay? And Brandon, you're 28, right? 28 or 20?
He wins.
20, yeah, he wins for sure. But here's the thing, though, because sometimes people watch, they make decisions based on what you and I say. They'll make decisions based on what you're doing with your portfolio. If you were to say the last 10 years, how much has your net worth increased based on your philosophy with the way you've been investing? Your net worth the last 10 years with your investments?
Well, you know, it's hard to say. I mean, my investment portfolio has gone up. In fact, you know, the non-gold portion over that time frame has done better. Now, my gold stocks did very well from 2000 to 2010, 11. But over the last 10 years, I have bigger winners in the other half of my portfolio than I do in the gold stocks. But I have a much larger portfolio also because I've earned a lot of money over the last 10 years, and most of it I didn't spend. And, of course, I've lived for the last 7 years in Puerto Rico, so I've paid no income taxes. So that's allowed me.
Different.
Yeah. So, but obviously, had I had all my money 10 years ago, you know, in the Magnificent Seven, I'd be a lot richer than I am today. And I mean, I'm rich enough, but I would have more money had I concentrated, you know, in those names. I did not do that. But, you know, when you look at this chart of that wealth, most of that wealth is all artificial. It's all on paper because of what we claim stocks are worth. But most of these Americans, if they tried to sell their stocks, the market would crash, right? So you say you have all these billionaires whose wealth is a function of the price of their stock. Mm-hmm. If they actually tried to sell that stock, it wouldn't be that high. So this is all inflation from the Fed created this. And a lot of this wealth is not because people, you know, really created value for the economy. They're just benefiting from the price level, the inflated asset price level caused by the Fed. And a lot of this policy, this low interest rate policy, caused a lot of malinvestments and misallocations of resources that otherwise would have lifted the living standards and the wealth of the middle class and the poor. But because of Fed policy, the middle class got poorer and the rich got richer, but not because they deserve to get richer. I mean, I've got nothing against somebody in a free market system who gets rich, because that's a function of how much value they've added to society. They've created products, provided services that people want, that people value, and that they voluntarily buy. And so the wealthy entrepreneur is a hero because he's done well. He's taken the means of production, the resources, land, labor, and capital, and combined them in a way to add value to society. But the Federal Reserve rewards people simply for owning an asset and just inflating its price, and now allows them to lever it up and borrow against it.
You know what this tells me? Yeah. But you know what this tells me when I look at this? Tom, Brandon, jump in anytime on this one here. Peter, anytime. When I see something like this, here's what I'll say. I'll say, okay, next time they're about to print money, I don't agree with it. I think it's a terrible decision to make. Guess what? Whatever you do, go equities. Whatever you do. If you go equities, if they're printing money, the money has to go to the capitalists. The money is going to go to the guys who are producing, business.
Unless the dollar finally cracks. And if the dollar starts to fall, you want to go equities, but you want to go international equities. You want to go commodities. You want to go equities that are, that own resources are in that space.
What needs to happen for the dollar to crash, though? We keep talking about this for decades.
Gold
52 years.
Gold has already broken out. But remember, when we started this, you go back to 1971.
Right.
It was 360 yen to the dollar. Now it's about 150. So you could buy 4 Deutschmarks with the dollar. Deutschmark doesn't exist anymore, but the Swiss franc was about 23 cents back then, and now it's, what, $1. Right? So the U.S. dollar has lost a lot of value since 1971 against some other fiat currencies. It's actually gained value against other currencies. But I think that we're getting ready for a major dollar decline. The gold breakout, I think, is going to signal it. Remember, the dollar lost when gold went way up from 2001 to 2011. The dollar index went from 120 down to a record low of 70. So the only thing that saved the dollar was, ironically, the 2008 financial crisis. But I think gold is telling us that the dollar is going down again, and this time it's going down for the count. I think it's going to be knocked off its pedestal. I think it's going to lose its status as the reserve currency.
What's going to be replacing it, though?
Gold. That's the dollar replaced gold. Before the dollar was the global reserve, it was gold. And when the dollar first became the reserve, it was because it was not only backed by gold, but redeemable in gold. Actually, the Federal Reserve note was an IOU for gold. The dollar was defined as a weight of gold. If you had 35 Federal Reserve notes, the government owed you an ounce of gold. Now, it used to be 20 until, Roosevelt devalued. But we were on a gold standard. We went off the gold standard in 1971. And so I think what's going to happen is the world's now going to reject the dollar the way we rejected gold, and it's going to go back on the gold standard. And that's why all these central banks are buying gold, because they want to back their currencies with gold and not dollars.